Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to be walking through some of the most interesting financial market themes that I'm observing. So we just had the March Fed committee meeting, no surprises, but based on comments from Powell, the Fed still expects 3 rate cuts this year. Let's take a look at the dot plot. That's all the different committee members, how their voting breaks down currently in terms of expectations for the Fed funds rate in 2024. Also, the MOVE index, that's the bond market risk index, drops to a new 2-year low. Let's talk about what exactly that is and why historically that's been pretty favorable for forward equity market returns. And finally, markets, many different equity market indexes are at all-time highs, but we saw a significant amount of new 52-week highs on stocks in the New York Stock Exchange. Let's talk about how significant and positive that improvement in market breadth has been. So Powell and the Federal Committee met last week, and as a result, no surprise in terms of what the action was. The Fed continues to pause for the 6th consecutive meeting here. The Fed, if you look at the dot plot is part of their summary of economic projections that gives us the expectations for each federal committee members for the Fed funds rate by the end of 2024. So on the chart here, you can see on the left axis is the Fed committee vote percentage. That's the percentage of members in the committee that expect the Fed funds rate to be at each respective Fed funds rate on the chart at the end of 2024. So this isn't next meeting, this is by the end of the year. And you can see the large majority, so about just north of 47% of committee members expect the Fed funds rate to be at 4.75%. Remember, that's the upper bound of the Fed funds range, so that's technically 4.5 to 4.75. And you had just a small amount, less than 5%, expected 4 rate cuts. So what's that tell us? It tells us more than half of the committee expects there to be at least 3 rate cuts. But if you look at, nobody expects there to be a pause, right? Every single member expects there to be at least 1 cut. So I think it's clear that the Fed's going to start to cut this year. If you're looking at the risks here, I think 3 is base case, but if there's any risk, it's going to be 2 versus 4, in my opinion, because you still do have a decent percentage, about a third of the members that are expecting perhaps less than 3 cuts. So this will be interesting to watch how it unfolds as we look at the data from inflation. Picked up just a little bit during the past couple of months relative to the previous 6 months, and the Fed will continue to be very data dependent. Now, bond market risk. This is the chart of the MOVE index. This is somewhat, if you're familiar with the VIX of the stock market, this is the VIX of the bond market. This takes a look at options markets related to Treasury securities, right? US Treasury bonds, and looks at the expected volatility of the Treasuries market. Take a look at this. The number, not that relevant for this discussion, the actual number itself, but it did drop below 100, and take a look at that. It's at its lowest level since February 2022. Our team did some research around this in terms of lower risk. Yes, is historically good for the equity markets, but when you see that large drop, if you look at that February peak, north of 120 there, we've had more than a 20% drop from that February peak. Historically, when that has happened since 1990, it's only happened 5% of the time historically, but the forward return for the S&P 500 is 4.5% when that's happened. So that drop in bond market risk post Fed committee meeting, that has historically boded well for equity markets, because we do see liquidity in the bond markets impact equity returns historically. Now, finally, market breadth. Last year, for most of the year, small and mid caps suffered. Market breadth is very weak. The Magnificent Seven was all of the headlines, right? They dominated. But we have started to see an improvement in market breadth in 2024, which has been very encouraging. On the chart here, we have the New York Stock Exchange composite index securities making new 52-week highs. You have in the red 52-week lows. You have in the green the number of 52-week highs. On March 21st, there were 441 securities trading on this exchange that made 52-week highs. That is significant. You can see that was just surpassing the end of last year when you had that really strong rally but that's the largest number since June 2021. If you recall, we had a pretty strong 6 months after that until we ultimately made a peak in the S&P 500 in early January. All that to say, significant improvement in market breadth. We are starting to see more participation outside of that large cap tech Magnificent Seven space. If you look at several different advanced decline lines at different market breadth measures, all of them say the same thing. With the exception of small caps, market breadth has broadened and improved dramatically, which is a very positive sign from our perspective. Now, finally, maybe ending on some sour news here. Maybe sour, not sweet, right? Canada rather, maple syrup reserve is down to a 16-year low. All right. Couple fun facts for you. Canada, it's in the Quebec province. That's the only maple syrup reserve in the entire world, number one. Okay. It's dipped to a 16-year low. It surged in 2020 after some really good weather during 2020 or 2019 and 2020, surged to record levels. 2021, 2023, unseasonably warm springs. A couple of fun facts around how it's harvested. It requires cold overnight temperatures and warm daily temperatures for that sap. Because of that unseasonably warm temperatures, the demand has been really high, but the supply and production has been really low because of those winters. All eyes on spring 2024 in Canada for you maple syrup lovers, because Canada just had its warmest winter since 1948, and all eyes on spring, because if they see a repeat, we could start to see that dip in reserves from Canada. Hasn't impacted prices yet because you historically do have these volatile production, and that's kind of the purpose of the reserves. But for you maple syrup lovers, let's hope we get a little bit cooler spring up in Canada and get those supplies back up in that reserve. With that, I want to thank everybody for watching, and I'll see you next time.